Hi everyone, this is Rob Roy and welcome to the Elliott Elite U.S. Market Update. Well, we finished the week to the upside on Friday as there appeared to be some resolution over the tax package that I'm sure you've heard a lot about, trying to get the taxes, especially for the corporate side, reduced here in the U.S. There seemed to be a little bit of uncertainty about that on Thursday. You can see Thursday we moved lower, and then a couple of the Republicans that seem to be waffling a little bit, really just playing games with getting things that they wanted because they knew their votes were important, back in line. And then Friday looked like everything was going to work out to get something passed this next coming week. So the SPX, the cash index, finished up 23.8 points, and we continue our march higher. I thought I would put the Elliott wave on here so you can see where we are with this now extended wave 5 that we have with the markets, and we can condense this and give you an idea. You can see that we have 124% extended wave 5, so you already know once we move past 100% that we are in extended wave. We know the markets are overbought. We've been through that in the past week's updates, but let's just give a target of where we can go from here. Now, once we get extended, you know, the rules have already been solidified, so it doesn't matter if we move to the downside as far as the Elliott wave doing its thing and predicting this move higher to the upside in the wave 5. But if the extended rules stay in place, we still have more to go, up to about, let's just call it 27.5 on the SPX cash index, and we've got enough time in this seasonally bullish part of the end of the year in order to make it that far, which in my opinion again would set up the long-awaited correction to occur after the first of the year, companies taking advantage of the taxes, etc., etc. But we'll see if we continue that far to the upside. But on the extended wave 5 rules, that would give you a rough idea of where we would be heading. Now let's see if we had some volume behind this in order to further that move. So we'll switch over to the SPY, and you can see, yes, there was good volume. Now, there was better than average volume on Thursday as well, to be fair, on the downward move, but on the recovery on Friday, a very good volume, again, on the expectation that the new tax proposal is going to get passed. So the move to the upside on Friday was supported with good volume, and that gives a little bit of credence to the fact that we could continue higher up to that 161.8% Feb extension in the wave 5. A little bit of economic news to go through with you. The Federal Reserve this week did raise interest rates as expected, actually causing the yield curve to flatten just a bit more, something to pay attention to. Flattening yield curve doesn't really mean anything unless it inverts, and we've talked about that in the past. But if it does invert, we'll cover that in more detail and talk about what that may mean. It's just one of those cautionary signs to keep an eye on. Retail sales were up 1%. The expectation was 0.8 to the upside, so a little bit better on the retail sales, but that's not really that shocking for November. We're heading into the holiday season, and if you're going to do or beat the number in retail sales and you don't do it now, that's not good. And retail sales, we know, other than Amazon, have been struggling here in the U.S. Core CPI, the Consumer Price Index, which measures inflation, was up 0.1%, which is not much. However, it moved for the year to date down to 1.7%. We were at 1.8% last month, so when you figure it in, even though it went up 0.1, we actually dropped down on the year number, and so that leads people to believe, okay, well, the Federal Reserve, you know, is just fine and they can keep hiking rates because there's no inflation on the horizon. Other people say, well, why don't they just leave it down and forget raising rates? There's no reason to raise rates because there is no inflation. But the Federal Reserve is smart enough to look behind the scenes and realize that although the way the government reports numbers here in the U.S., we've talked about it with the jobs report, they do the same thing with the CPI. The producers, basically what's occurring is there is inflation. Doesn't show in the numbers the way they're reported, but producers are actually making smaller quantities but charging the same price. So prices themselves aren't going up, and that's what's measured by the way the U.S. government sends out their numbers, but that doesn't take into account that you are paying the same amount for less. That's just another way of creating inflation. And so in that manner, the Federal Reserve is justified in raising rates. One other thing is the New York PMI. It's called the Empire PMI, Producers Management Index, is at 18.0, and that came down from 19.4. So is that a little bit of a sign of maybe some weakening? We'll have to see. The New York PMI is one that's heavily watched. So just wanted to throw that economic stuff out there for those of you that like all the things behind the scenes. Looking at the VIX, we finished, as you would imagine, to the downside with such a big update on Friday, and here we are floating around these very low levels, very likely to stay to the downside, barring some sort of a black swan event of some kind. We will just drift around down in the lower end of the VIX as we head into the end of the year, which is normally a very low volatility period. Wanted to update you on the call butterfly that we had set up on GOOG, that we had sent out as an alert here in the US, and put the Elliott wave back on. And if you've seen the fact that our target up here, our butterfly, is set up, 1087 is the lower end of the range, and the butterfly is set at 1080 on the low, just trying to be a little bit more on the conservative side. And then the midpoint of the butterfly is at 1100, right just above where that target is, and then the upper part of the butterfly is at 1120. So that's the expectation. And what happens with these out of the money butterflies is, again, you make money once the stock just begins to move your direction. The position becomes profitable because it is out of the money. And once you pass the lower line there where the first calls are purchased, they move in the money first. And so then you accelerate the profit to the upside. It's already at a 48% gain, so it's working out really well. And regardless of the timing, once you move within those wings, if you will, of the butterfly, you want to close a position and take the profit. Don't get greedy. Don't just hope that it bounces around in here for a while and more time goes by. If it gets there a little early, just take the profit, be happy, and move on. So that was an update there. And I wanted to show you something that was another call butterfly that we sent out here in the US. And this is a bit more complicated, but it also shows you the power of Elliott wave and the things that you can do with Profit Source or Integrated Investor. And we talked about this in a past recording. Let me put the Elliott wave on, and you can see that this is on ALTRA, MO. We're in a wave 3. So a lot of people have been taught over the years with Elliott wave, don't trade the wave 3. We've mentioned that in the past as well, that there are ways that you can do it. Wait for that wave 4. So you want to wait till the wave 3 is complete. If it's done now, then the wave 4 correction starts. If it continues higher, you wait, but you wait until the wave 4 has been realized, and then you trade the wave 5. And my comment has been, why can't you trade the wave 3? You can, especially if you understand the more, I don't really want to call it advanced, because it's just a different area of Elliott wave from what most people have been taught, and that's the corrective patterns, which are flats, zigzags, and triangles. And we've talked about those, but let's just go ahead and take the Elliott wave off now so we don't get confused with that. But remember that we are currently in a wave 3. Let's go back to where this started. So the first move here, clearly this is an impulse, and that's when people always want to know, how do you know where to start the Elliott wave count? Well, we moved to the downside, and that was a clear reversal, right? I mean, there's no debate about that. And then we had a correction from that move. So when you see that, when you see an impulse move and a correction, your first thought is zigzag pattern. So we do our measurements here. We use the Fibonacci retracement tool, and we measure that retracement, and lo and behold, it retraced exactly to the 61.8% level, which in my experience is the most powerful of all the zigzag patterns. There's other combinations that work, but I really love when we have a 61.8% fib retracement. So with that in mind, then that gives us the opportunity to put the extension tool on and we look for where's the 100% extension. And isn't that amazing? Look where the 100% extension is. It's right here. And look at this day right there. Right to the 100% extension. And then we pulled back. Well, let's get to that in a minute, because that's what you want for an extended pattern. But the point here is, and I'm going to go ahead and take this off now so that we can detail a little bit more. You get too much stuff on there, then it starts to become a little bit convoluted or confusing. So the zigzag pattern that was completed is right there. And I just showed you all the numbers. All you have to do is just learn and understand the numbers. So you want to learn more in depth on Elliott wave, we'll teach you. And you can take even greater advantage of the power of Profit Source and Integrated Investor, the tools that are already in there. So there you go. There's your ABC zigzag. Now note that A was a monowave, B was a monowave. So those of you that are familiar with Elliott wave know that we're likely going to get a complex wave in there somewhere. One of the three waves is usually going to be complex. Not always, but usually. And look what occurred here. So we have a flat in the C wave. So there was the move to the upside, recovery, and then extension. And so I'm going to put smaller ABCs on that, just not to confuse it with the zigzag pattern. And usually when you have a pattern within a wave, use the smaller letters just to distinguish that. So there was a nice flat in there, and then we have a connector wave. So we have this X wave, which I told you this was a little bit more advanced, but this is the power that you have available. So we had a flat, we have an X wave connector, and then we took off into the larger zigzag pattern. And in the larger zigzag pattern, let me take this stuff off so that you've been able to see it there. Let's take this off. And we can focus on where is our target price for the larger zigzag, which was the original start. So we have 161.8% extension as far as the beginning of a larger zigzag. That would be from the original zigzag that we talked about. And so the expectation then is for a further move to the upside. But how far up do you want to go to the upside from here? So what we've done is we've set up a butterfly with where we are right now, and 75 is the target, and then 77.50 here. Now why did we do that? Well, let's go back to the original Elliott wave pattern. If we get the wave 3 to continue, we're going to run into that level. Where is the target on just the original Elliott wave pattern? Just above 75. So we have basically, from an Elliott wave standpoint, two opportunities to hit our target. One sooner, one later. Which one is going to make a greater profit? So this is a question regarding butterflies. If you understand how butterflies work, obviously the longer it takes to get there, the better off you are, because butterflies are time decay friendly. So if the original Elliott wave pattern works, then we're sitting perfect. However, if it gets there sooner, that's okay too, because we'll still make a profit because it's a directional trade by placing the butterfly out of the money. So if the wave 3 continues higher, and that's the unknown, right? And nobody really knows how far a wave 3 is going to go, but if it continues to the upside, we hit the midpoint of our butterfly. If it doesn't, and just the traditional Elliott wave pattern plays out, that works out well too. Might even work out a little bit better. But why not trade the wave 3, especially when we have those patterns inside there with the power of the zigzag patterns? So again, this is how you can break charts down. You don't have to not trade the wave 3. You don't have to wait for the 4 and just trade the extension. There's so much more to Elliott wave. We'd love to teach it to you. Hope you've had a wonderful week. Hope you enjoyed your weekend, and we'll talk to you again next week. Take care, everybody.